But we're going to move on and kickstart our next conversation. Mithun Aswath, managing partner at Kivah Advisors, is with us on the show today. Mithun, great to have you on as always. So what do you think? 19,000 plus, some serious momentum, and the market has, completely shown a new sign of life in the last three months. So first of all, what are you doing? Are you also simultaneously booking profits, or are you buying every single dip? How are you approaching things at 19,000 plus?
Yeah, good afternoon, Surabhi. Yes, the markets have, scaled a new landmark. But we have to take this into context. These numbers are much higher because of the percentage moves now. A 5% move is 1,000 points on the Nifty. So year to date, I think the index is up only about 5-6%. And we still do believe that, in the last few weeks, you saw a lot of rally in the mid and small caps. We could see some, catch up from the large caps. And I think that's what's been happening over the last a few sessions, because there are several, marquee names, large caps, which still do have steam, according to us, over the next 3 to 6 months.
Okay. One such idea, Mithun, that you like is ever-ready industries, right? And you basically believe that the Burman family coming in that's the kind of a fulcrum around which you're building the case for this one. But the Burman family came in some time back, right? It's been a few years now. And we've not really, the electrical equipment that they sell, lighting, etc., those products, etc., also been on the shelves on sale for a while. But has traction really picked up in any meaningful way? Why are you hopeful here, Mithun? Go on.
Yeah, I think, Prashant, this was one of the investments that the Burman family had made. But the Burman family over the last 1 year has actually become the promoter shareholder. And, they have appointed professional management to run this company. What you need to look at is that, the earlier, owners of this business did not really invest on the brand. And over the last 6 months, you've seen the new management come in and spend quite a lot of money on marketing and to reinvigorate the brand. Now, you would be aware that Eveready is the largest in terms of market share on the battery side. They are also have the highest market share even in the torchlights, which they sell. The business which they entered recently, and they have about 300 crores of revenue last year, is the lighting solutions. And that is where, they are going to see growth. They are expecting, the 300 crores to go up to about 500 crores over the next couple of years. Also, last year, you saw margins kind of dipped for this company because of raw material inflation. Plus, they had some expenses towards consultants that they had paid. So I think FY24 and FY25 will be more normalized years for this company, wherein, you will see revenue growth, plus, the operating margins should improve. So these are two triggers, I think, for the company.
Mithun, afternoon. What have you made of the auto sales numbers? The weakness in two-wheelers is painting a somber picture. Hero, Bajaj Auto, TVS Motors, all of them missed the mark. For Bajaj Auto, particularly this time, it's the domestic demand which has been weak. And now Bajaj Auto is the top nifty loser with a cut of close to about 2%. What were your key takeaways from the June sales numbers on two-wheelers, passenger vehicles, CVs, and how does it change your investment thesis?
Yeah, afternoon, Rima. The couple of companies that we've been betting on the OEM side have been Eicher Motors and Tata Motors. Both of them reported reasonably good numbers. Tata Motors on the EV passenger vehicles has seen good growth year on year. Having said that, there has been a little bit of a degrowth on the overall CV sales, but the HCV sales continue to grow Y on Y. So Tata Motors has done a reasonable set. Also, Eicher Motors continues to grow on a year-on-year basis. They continue to grow even this month. I think maybe Hero disappointed a little bit in the numbers for this month. But there have several launches. I think their Harley Davidson is also being launched as we speak, and they have several launches coming this year. So I'm not too sure that the market would be too fussed about 1 month's numbers, especially coming off May's numbers, where there was a lot more growth because of the wedding season.
Okay, so that's a view on some of the auto names. Mithun, now how are you holding out for IT? Because that's the next big event. I think no one's expecting any great quarter. Most of the notes that are trickling in are saying that this is going to be more of the same sluggish talk that we saw in Q4. Have you been accumulating at lower levels after we got the Q4 disappointment, or are you going to stay clear till there's some sign of a pickup?
So, we played it through some mid caps and some large caps within IT, and at lower levels, we have continued to accumulate. Some of the ideas that we've been positive on are companies like TCS, Persistent, and Expleo on the small cap side. And these have done reasonably well. Infosys is another one that we've been monitoring and, adding at lower levels because I don't think we can really time the bottom. There is obviously concern, and I think most analysts on the street do peg in Q1 not being very good. Having said that, the same year to date, you have the NASDAQ going up 35-40%. So who's going to be right in this is a difficult call. But I think the large caps on declines are showing reasonable value. Infosys is at the lower end of the PE range. And they also have got some large deals in the last few weeks. I think with the Danske Bank, they got about a $400 million deal. So large deals continue to happen, and that should hold them in good stead.
Mithun, I remember maybe you've gotten out of those positions, but you like the hospitality space, even operators like Thomas Cook, etc. Do you still have that view?
Yeah, Prashant, I think we continue to hold onto this idea. If you actually see, Thomas Cook had corrected some time because of this implementation of TCS. However, the last couple of days, the government has changed the policy wherein up to 7 lakhs, the existing TCS policy of 5% will hold, and 20% will be only on the excess of 7 lakhs. And this will be applicable only from the 1st of October. So this definitely bodes well for the domestic operators. So I think this year will be a year wherein outbound traffic, where the recovery rate has only been about 60% so far for Thomas Cook, is likely to inch up towards that 100% over the next 2 to 3 quarters. And that's what I think the management expects. So FY24 will be a good recovery year, but FY25 could be a really bumper year for the company is what our expectation is.
Any NBFC which looks attractive to you, or where there is value at current levels? Because most of them have had a fantastic run-up in the last 3 months. Just this month itself, L&T Finance is up 32%, Shriram Finance is up 25%, Piramal Enterprises is up 24%. So the question is, if someone wants to get into the NBFC space, which stock is attractive?
Honestly, Rima, on the financial side, we've held our guns only on the 2 large companies, the private sector, which was HDFC Bank, HDFC, and Kotak. But in the small cap side, we have been doing some work. There are places where there is value. Companies like Ujjivan, even for example, Manappuram, do look attractive in terms of valuation. But this is not something that we have advised or invested in, but just on the valuation parameters, these look quite attractive.
Okay, got that. Good talking to you as always, Aswath, and we look forward to our next conversation. You have a good rest of the week. We'll take a break on that note when we come back. Of course, check on what's buzzing in the dealing rooms. We'll see what's the chatter that Nimesh is picking up. And then we, of course, get you some trading calls for the final few minutes.